Stocks trade ranged on Dalal Street. The sensex and the nifty trade flat with a negative bias. Auto and healthcare stocks gain, while realty, FMCG and IT, all of them drag. The mid-caps fall in line.
HDFC Life Insurance, ICICI Prudential Life Insurance and SBI Life Insurance assess the impact of GST revision on their embedded value to be less than analysts had estimated, boosting their stock prices. The street also eyes a rise in penetration.
Commerce Minister Piyush Goyal says the India-US relationship is the most consequential, adds that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with Trump administration. He adds that India will make every effort to come to a greater understanding within the framework of international trading laws.
Axis Bank's Neelkanth Mishra says that after having brought down the cost of capital for enterprises through fiscal discipline, the need is now to improve the ease of doing business, a point also highlighted by business leaders on the GST reform. Hello, good afternoon. You've tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well. Mangalam, good afternoon. And surely a day where we started in the green, then we saw a bit of a correction. Now coming back from the day's lowest point, but just around that level, right? Not much of a recovery. Even the broader end of the market is not doing. And the bank also is down 0.5% right now.
Yeah, but it's a very interesting scenario for the market, where fundamentally there have been inundated with good news after good news, but every rally is being sold into. This morning as well, we saw the GIFT Nifty, which was up around 80 points. We opened higher, but that was immediately sold into. The only solace is the fact that we are seeing some support at lower levels. So, barring, say, the auto stocks, which continue their rally from yesterday, or something like the healthcare stocks, which are doing well in today's trading session, we've seen some bit of profit taking, understandably, on the consumer names. So the FMCG index comes up for you. And IT stocks, they've been under pressure despite strong tailwinds coming in from the US markets overnight as well. The question is where we go from here, and that is something that we'll most definitely watch out for. The other part that I'm looking out in particular for the market, two data points. One is the advanced decline chart. That comes up for you on the screen. They've been, flitting between red and green on the top for most part of the day. And right now we have 1,500 stocks which are declining for just about 1,200 stocks which are advancing. So there's a bit of a tug of war out there. And the second thing that I'm looking at is the India VIX. As the market's moving lower, the India VIX is moving higher. So that's telling you that an element of call writing is fairly active in market today. So whether we see some, resistance at important technical levels closer to 24,700 or not is something I'll be monitoring very, very closely.
Absolutely, Mangalam. Key to watch out for. But I just want to highlight one stock, that is Network Technologies, right? Last 5-6 days of gains continuously coming in there. And, it's up more than 20% in just these 6 days. There was an announcement which came in terms of an order. And when seeing that buzz in the stock continue even today as well, 6% up as of now. But which are these other stocks that are moving in today's trading session? Let's go across to Vivek for that. Good afternoon, Vivek.
Well, good afternoon. What a seesaw session we've seen, highlighting and mirroring the kind of move that we saw yesterday as well. Quite a few stocks continue to see up move, and top amongst them is the key GST cut beneficiary, which is the entire auto pack. So if you look at the auto names, have a look at M&M, Eicher Motors, Maruti, Tata Motors, cooled off a little bit, but most of the auto stocks continue to see the move higher. M&M, one of the top beneficiaries, that stock continues to see a 2% up move today. The other stock on the radar is GMDC, or Gujarat Mining. Now, this particular name on very strong volumes today, up almost 11% at one point of time. Again, almost 11% higher, the top gainer as far as the NSE 500 index is concerned. More clarity required in terms of rare earth mining and the opportunity for this name, but clearly the street likes this particular name. BSE Limited, again, 4% higher, very strong up move over here. Yesterday was the first session where in this particular week you saw the Thursday expiry for BSE. Options volumes were very strong yesterday, and that has aided the kind of recovery that BSE has seen today. And SKF India, not a stock we discuss too often within the bearing space. This stock in the broader end of the market is one of the top gainers today. On the other hand, quite a few laggards as well. You cannot look past the IT pack, news flow coming in, but despite that, you're actually seeing quite a bit of selling pressure, and volumes here are quite high. Persistence, one of the top laggards in the session today. The other set of stocks that continues to witness selling pressure is actually the realty pack. Most of the realty names under pressure today. Look at Godrej Properties, Prestige, Oberoi, all of them down over 2.5%. Sri Digvijay Cement, you did see the news flow coming in yesterday, one from the broad end of the markets. P promoters are planning to exit, selling to another set of investors. That stock down 4%. And Varun Beverages, for the second straight session, continues to witness selling pressure today.
Take that point, Vivek. Thanks a lot for that. In fact, we'll take off from where you spoke about itself. Varun Beverages, the stock currently at the low point of trade over the last few trading sessions. It has been at the lower end of the trading range, and that perhaps could be on account of fears that the street has that there could be an increase in the overall tax incidence for carbonated beverages. 28% plus cess goes into 40% minus cess. So let's talk about that itself. We have an exclusive conversation right now lined up with Ravikant Jaipuria, who's the chairman of Varun Beverages, joins us on the phone line to discuss these very factors itself. The first point that we'll discuss with him, the impact of GST rate cut on carbonated beverages. In fact, the GST rate increase for carbonated beverages. Then the second thing we'll see is whether they benefit from the lower rate on water and non-carbonated drinks, which include the likes of fruit juices, etc. And the third, most important, because of the products that they sell, festive season demand outlook and competitive activity right now in the market itself. Thanks a lot, Mr. Jaipuria, for joining in. The street seems to be a little feared about overall increase in tax incidence. So I just wanted your thoughts on 28% plus cess versus 40% GST minus cess. How does that change the overall tax incidence for you on the carbonated beverages side? And on the non-carbonated beverages side, there has been a reduction in water and reduction in taxes for fruit juices, etc. So net-net, would this be a positive for you, no change, or a negative? In all these cases, if you could put a number.
Well, I think it's been a very positive budget for us. I mean, we would have hoped if we could have got even better on CSD. But if you look at it, it used to be 40%, it was 28% plus 12%, and government has again put it at 40%. So there's no change in the soft drink, which is CSD market. But we have got huge benefits on water, which has come down from 18% to 5%, and in our juice and value-added dairy, which has come down from 12 to 5%. And this is about close to 30% of our volume. So on 30% of our volumes, the GST has come down, and which we are going to pass to the consumers, and we feel it is going to fill up the volumes, and this will make us look at how we are going to expand our capacities and take it forward. So I think it's a very positive budget. We would have hoped that it could be even more positive by getting some reduction on CSD, but we are very happy with the budget overall.
Okay, very happy with this rate cuts, Mr. Jaipuria. And 30% of your volumes is where you're going to be seeing that additional benefit, right, coming in. Good afternoon, Mr. Jaipuria. What could that additional benefit be, incremental, anything for FY26 that you could highlight, whether in terms of value or overall in terms of revenue that one could expect to see?
Well, I think revenue, I don't think will change because of this, except with the volumes growing, I think the revenue will automatically change. But I think the capacities will get used, and with 30% of our mix, which is going to be, we are going to pass the consumers with the benefits. I think it will be very positive for the whole industry.
Right, it will be positive for the whole industry. So 70% is, carbonated, 30% is non-carbonated, which is fruit juices and water, on which you get benefit. The other 70%, there has been no change. So net-net, it should be a positive as per your understanding. Could you give us a sense on the overall demand, Mr. Jaipuria? The second quarter for you, which is basically second quarter calendar 2025, saw India volumes decline by 7% due to unseasonal rains. How has the current quarter panned out? And is there any outlook that you can give to us for the festive season given these rate cuts?
Well, I think this effect will only come by the end of this quarter practically. But overall, this has been an unprecedented year where, the rains, the whole summer has been rained out. And our industry is very seasonal to the point of very relevant to rains and weather. So, but even after looking at that, we've not really had any negative impact, which is very positive. And I think with the little change in the weather, I think we only see upside going. So we don't see any negativity, and I think going forward we see reasonable growth coming back, and we are looking at further investing and enhancing our production capability.
All right, just a two-part question, Mr. Jaipuria. One, on the full year, what kind of volume guidance can you give us for the India business? And secondly, you are saying that you will take the incremental savings from GST and put it back into CapEx. What would that number be according to you?
Well, you see, the question is, if you look at it, the first quarter we grew at close to 15% when the weather was normal. The next second and third quarter both have been rained out practically. Except September, we still don't know. But otherwise, even with the rained out, we are still looking at flattish numbers, which are very good for the industry after having such heavy rains. And I think as soon as the rains reduce, we see the numbers coming back to normal and double-digit growth coming back.
Right, Mr. Jaipuria. Also, just want to understand, right, in terms of competition. Now, Campa is claiming to have more than 10% market share in few regions that we are highlighting. Now, they are saying, now, what about Coke and Pepsi? Both have responded with lower SKU price points. And what's your outlook now in terms of market share, competitive intensity? How does that shape up for the company? And also in terms of penetration, if you could highlight that now.
See, we are adding penetration every year. We are adding about 8 to 10% more outlets, which is about 400,000 to 500,000 outlets are being added every year. And that's why we are very bullish. And if you look at the industry, there are 13 million FMCG outlets. And we are only reaching to about 4 to 4.5 million outlets. So the scope is so large for everyone, Campa, ourselves, Coke, everyone to grow this industry. And our per caps are still very low in the world. So I think there is no reason to worry with new entrants, and it will only enhance the market. And I think there will be more visi-coolers going in the market, which is chilling equipment, and there will be enough for everyone to grow.
Got it. It will enhance the market, but in the near term, it may impact margins, right? Because of the competitive pricing that we've seen.
It's not impacting our margins. So if you look at our even our last quarter results, our margins have not come down. We are quite healthy and very happy with the margins which are going, because our volumes are not coming down, and we have put up large plants which are giving us a lot of capacity utilization is working, and they're giving us margins which are much healthier than with our smaller plants.
So this 28% margins is what you will sustain, right, for the year as well?
Well, 28% was a very high margin, which is, we have never said that. We've always said margins in 20 to 25%. So
okay,
we've never, but we've had very good margins, and if we can continue with these margins and with the growth coming, we'll be very happy.
Got that. Take that point. Thanks a lot, Mr. Jaipuria, for stopping by and giving us an outlook on the overall impact that companies like yours would have because of the GST. So net, 70% of your business, which is that of carbonated beverages, has no change in tax. The earlier rate was 28% plus 12% cess. That was 40%. Now that has been subsumed in the new GST, which is 40%. So no change out there. The other 30% that there is, which is water, juices and all the others, on which there has been a reduction from either 12 or 18% down all the way to 5%. And that is something that you believe will be passed on to consumers and be volume positive for you. Thank you so much for that clarity. Take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.
Welcome back to Halftime Report on CNBC-TV18. Now, we're going to talk and bring on our fundraise segment, which is a special segment, where we are going to be focusing and talking to the partner at 8 Roads Ventures. Now, this is a company which invests in tech side, med tech, healthcare tech, I beg your pardon, and that's what the focus is, right? Because healthcare in India is the focal point. Where are we going to be heading from here? Where is their penetration required? What are the trends that are going on? We're joined by Prem Purva, who is the managing partner at 8 Roads Ventures. Prem, good afternoon. Thank you so much for coming to the studios. And, let's start by talking about this industry where, overall in India, healthcare hasn't had that much of a penetration versus the globe. Now, over the years, how have you seen this change? What is the market that you're seeing for whether health tech, med tech, overall consumer health side? Where are you seeing that moving?
First, thank you for having me, Vinny and Mangalam. I think it's a matter of when and not if that the market expands. Healthcare as a market has expanded close to 7 times in the last 20 years. It's a roughly $250 billion market that is poised to double to $500 billion by 2030. And as you see a few things change, India will catch up to countries like China, which is today a $1 trillion market, and to the US, which is a $5 trillion market. Sooner than later, you're seeing detection of diseases happening earlier, thanks to better diagnostics. Folks, both in the cities and outside, are totally oriented towards wellness and preventive health. So that helps. You've got insurance penetration going up, affordability is going up, and access is going up, both through, the smartphone, where you see 80% penetration, but also through brick and mortar infrastructure on the ground, thanks to all our private equity peers investing in hospital chains.
What's interesting is that I track the consumption space, so pardon my ignorance about the numbers on the healthcare space, etc. But I want to know, intuitively, they should be pretty similar in size, right? Because the same consumers who are consuming stuff from the FMCG, D2C players, etc., are the ones who will eventually, at some point require some sort of healthcare. It's a human sort of market, so to say. So why is there this divergence in innovation, investment, and the buzz around healthcare versus the consumer sector? And what is it that investors and PEs, are doing to increase the growth here or accelerate the growth here?
Give it time, Mangalam, is the answer.
By give it time, do you mean as we age, we require more healthcare?
I hope not that, and we focus more on wellness then.
And hopefully you get younger as you age. But I think that it is all changing on the ground. You are seeing a bigger push towards consumer and wellness products, which are all driven by brand. You are seeing a real change towards people wanting and preferring organized healthcare and branded healthcare, and we are seeing this change after the pandemic. People want to go to doctors who are known. People want to go to institutions that are well known. And so the importance of the brand, also take drugs that are branded. So the importance of the brand is only accelerating within the healthcare community, which of course has been a mainstay for the consumer business. So we are also seeing that in a lot of our consumer healthcare investments, where you saw a slight dip after the pandemic as people went back to their old ways. But now you're seeing a re-acceleration and a resurgence of interest in both products and services that are branded.
So in terms of investments, if you could throw some numbers, earlier we had the wave of D2C investments, then there was tech investments, there was manufacturing, etc. What proportion of PE in VC investments are now going into healthcare, and what does that mean for the growth here?
Healthcare has become the largest sector for VC and private equity investments in the country. For a person who has been focused on the sector for the last 18 years, it's a joyful moment for me. In the investment quantum has doubled from pre-pandemic levels, so from 3 billion a year to close to 6 billion, and it has stayed steady at that rate, if not moving up. For the first time, exits for venture capital and private equity are keeping pace with realizations. And for anyone, therefore, who is investing into these funds or funds like us investing in these sectors, That's the holy grail where you're able to invest and exit at the same momentum. So it's all creating a virtuous cycle for the sector.
Prem, while these investments have doubled, post pre-pandemic to now you're comparing, I want to understand in terms for the pharma where there's maybe drug making, manufacturing, that's what is going on. We've spoken about this China plus one strategy for the pharma pack as well. Has that now been significantly playing out? Are we, moving towards maybe a scale to achieve or compete with China?
You are seeing a perceptible change on the ground with multinationals wanting to think about a China plus one hedge and diversifying their supply chains, and India is an obvious choice. So the number of RFPs for contract manufacturing organizations and for other manufacturing entities has significantly moved up. One of the things that I find intriguing is that it's very hard or will be harder for India to compete on scale when you think about the size and the scale of China manufacturing versus Indian facilities. But what India has begun to do very well and innovatively is to innovate on process. So for example, one of our partner companies called Enzene makes biologic drugs, but instead of making it in these large several thousand liter reactors, they make it in a continuous fashion, so they're able to shrink the footprint to the size of a room. We have another partner company called Laurus Bio, which is beginning to make products for the FMCG companies globally, but using a biomanufacturing platform. So process technology is really working to the country's advantage.
All that. Quickly, before we let you go, 2 sectors in the healthcare space that you're betting big on right now, which you believe can become extremely big? Because the last time you joined us, you said protein would be one, and the second would probably be, preventive injury prevention. Now, what are the things that you're betting on?
You have to come to our conference next week called Scale Up Health. We are in our fourth edition of the conference. But if I had to pick 2, I would say one is innovation for the world coming out of India. Can India catch up to China and then the US in terms of drug discovery and innovation? And the second is there a version 2.0 for digital health and health tech in the country? Will large language models and AI disrupt the way we think
What
about
are some of the companies that you're talking to right
primary care? If I told you that, I'd have to kill you, Mangal. That is, as you know, our IP. But and also, can India innovate from services to products when you think about, healthcare IT?
Thank you, Prem. Thank you so much for joining in and giving us an outlook onto that. We'll obviously stay tuned to the outcome of the investors meeting that you do over the next week, and we'll watch out for that as well. That, ladies and gentlemen, was Prem Pawur of 8 Road Ventures investing into the healthcare space. What we'll do is take a short break, come back on the other side. We will have Manisha Gupta joining in with RS Sodi, the president of Indian Dairy Association, on the GST cuts. Stay with us. Welcome back. You're watching us here on Halftime Report on CNBC-TV18. Just keep an eye on a couple of these stocks at the bottom of your screen. BSE is definitely one of the top buzzers in today's trading session. A lot of open interest decline has happened out there, which implies that there is a lot of short covering on BSE. The other thing that we're looking at is a remarkable amount of profit taking that we're seeing in all the consumer names. So be it Dabur, which is at the low point of trade, we have Colgate, which is at the low point of trade as well. So all these stocks which had seen a big buzz in anticipation of the GST cuts, and yesterday also post the GST cut announcement saw a bit of a pop, are now seeing some bit of profit taking after the up move that we've seen already. Can't say the same for all the other indices as well. We're currently at the low point of trade. So we have the Nifty, which is at the low point. We have the mid cap index at the low point as well, and the Nifty is actually dragged lower by the Nifty Bank itself. So we do have a bunch of stocks which are in focus today. So let's talk about the F&O space right now as we speak. We do have, the frontline indices. They come up for you on the screen, which is the Nifty as well as the sensex currently at the low point of trade. But if you look at all the other indices as well, the IT index not helping the cause of the Nifty, down about 1.5%. The Nifty Bank down about 0.5%. And we are seeing, the FMCG stocks also see some profit taking. The only thing which is carrying its momentum from yesterday is the auto pack. So the Nifty Auto Index comes up for you on the screen. That's the one which is still in the green, holding on to gains that we saw yesterday and building on a little on that as well. But if you look at the broader markets as well, the number of decliners are a little more than the number of advancers. So as a result of which we have those crisscross lines up for you on the screen, and the India VIX too has moved higher. Important levels to watch out for on the Nifty right now, as we are at the low point of trade. We're looking at the Nifty below the 20-day moving average. Yesterday, we went all the way up to the 50-day moving average, from where we saw a bit of a sell-off, and closed around the 100-day moving average. So on the way up, closing about 24,700 would be extremely crucial, which the call writers believe may not happen. Why do I say that? Because look at the 24,800 call, 40 rupees premium on offer there. So 24,850 thereabouts, there is resistance. 24,700 put has seen some writing, and the 24,700 call has also seen some writing. 24,700 call has a premium of 80 rupees. So 24,780 to 24,850 is where the resistance is. Support comes in closer to 24,600. So that's something that we will watch out for too. In terms of individual stocks, I'm looking at RBL Bank. The RBL Bank stock has been a buzz, but remember, it is in FNO ban. So what really happens out here is something we will watch out for. A lot of short positions added in a couple of these IT names that I spoke about earlier. So Persistent Systems, for instance, comes up for you on the screen. We're seeing Prestige Estates, which is a real estate name, seeing some short positions being added on it, and some short covering on BSC. So that's about the FNO setup of trade this morning. But we do have Manisha joining us and the promised conversation with RS Sodhi. Manisha.
Thank you so much for that, Mangalam. Yes, we have Mr. R.S. Sodhi, who's President, India Dairy Association, and he joins us on the show. Mr. Sodhi, I have to give it to you, because as soon as the GST consultations had started and the date was yet decided, you had already started pitching out on the GST rationalization when it came to dairy, and almost everything that you had presented and asked for, would you say, has been given?
Yeah, thank you, Manisha ji. On behalf of 80 million milk producers of India, we are thankful to Honorable Prime Minister, Finance Minister, and the GST Council, because dairy industry for the last few years have been asking for good rains. But luckily, we got cloud burst as far as dairy is concerned. Very good benefit. And most of our dairy categories got very good reduction in GST, and right from ghee, which is the biggest category and biggest benefit, from 12% to 5%. Ice cream got from 18% to 5%. Cheese got from 12% to 5%. Paneer, 0, from 5 to 0. So overall, if you see the benefit to the dairy industry, total GST deduction will be around 11,400 crore based on the current market size. But we are very sure with this reduction in GST and some products going to zero duty, the unorganized dairy sector will shift to the organized pack category. So we are very confident that total collection of the GST may not reduce.
Okay.
But more people will shift towards, because I'll give you just example of ghee. 12% GST means 42 rupees per kg of ghee. So not 42, it is around 75 rupees or 80 rupees. So
Okay.
what happened, because 600 rupees and 12% this, so 72 rupees. So what has happened, lot of people were doing business, I'm very frank, number 2, without invoicing. And they were investing 2 or 3 rupees for doing this illegal, unorganized business. But now with coming GST to only 5%, all of those manufacturers, small manufacturers, will have to get into the GST invoicing
regime. Absolutely. Mr. Sodhi, it's not just about unorganized to organized. Would you say that a lot of analog paneer or mixings and blends, all of that perhaps would also find its way into a more proper regime here?
Yes, definitely, Manisha ji, because till now, unpacked, unbranded paneer had the 0 GST and packed had the 5%. And when you have to sell unpacked, unbranded, you have not to declare anything. So most of the paneer sold loose were adulterated, made out of vegetable oil and the starch and other thing. But now with zero duty on packed paneer also, so consumer is going to get the branded paneer. So when you brand it, naturally you can't do adulteration. So it will definitely reduce the adulteration in paneer considerably. So it's good for the paneer, it's good for the ghee, it is good for the whole dairy sector. Only two small things have been left, which we are again representing to the GST Council. That is the buttermilk and curd, and of course lassi. These three categories had no GST about 1.5 years back. It recently shifted to 5% GST. So we are again requesting that please exempt these three essential categories also, because these are common man product: buttermilk, lassi, and curd.
Mr. Sodhi, going forward now, this is also the festival season, and we haven't heard from anybody in the segment that there is any price rise on milk being expected, anticipated in the near term now. How have you seen the monsoon, the flush season, the procurement availability, etc.? And would you also say that price rise as of now is really not part of the conversation?
Well, Manisha ji, if you talk about price rise in dairy or particularly milk, last 3 years, every year, price increase has been only 2 rupees per liter, which is 3 to 4%, much lower than the food inflation. And we have been getting very good milk production. And when price increase is not much, so demand is also good. And fortunately, farmers' cost of production also did not increase, because feed cost, the feed ingredient cost ruling price is lower than the previous year. And I foresee that in the coming few months also, there's no chance of price increase in any of dairy product. I believe with this reduction in GST, most of the products prices will reduce, and which is good. So demand will definitely grow. So what we expect in the coming year, rather than the price increase, very good volume growth. So that farmers are going to get very good price for their product, and more farmers will shift toward the organized sector of dairy, where transparency is better and efficiencies are better.
Okay, Mr. Sodhi, thank you so much for joining us, because expecting more volume growth is going to be something to watch out for, especially during this festive season, a boost coming in for the industry as well. So thank you so much, Manisha, as well as Mr. Sodhi, for joining us on the show as well. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back and we'll be chatting with Varun Berry, MD at Britannia Industries, and we'll talk about the sweeping GST changes that have come in there. So stay tuned.
Welcome back. 100 points lower for the Nifty. We have the Nifty Bank lower by about 300 points as well. The mid-cap index is where the pressure is right now. It's building 1,600 stocks in the red for about 1,100 stocks in the green. But let's go across to another big exclusive that we've lined up for you after the big changes that have been announced by the Finance Minister and the GST Council on GST. We have Britannia. The stock did extremely well in yesterday's trading session. Varun Berry, the MD, joins us now. We can see him on the screen. Three major talking points that we have with him: impact of the GST rate cuts on overall business for him, outlook on commodity and prices in the second quarter, more importantly, growth in the non-biscuit part, dairy and cheese, due to these cuts coming by as well. Mr. Berry, always a pleasure speaking with you, and I think you and your ilk are having a good day, literally, on account of the treat that the Finance Minister and the GST Council have given you. But for a sector which is as price sensitive as yours, 60% coming in from price point packs at 5 and 10, etc. If you could give us a sense on how much could the incremental volume growth be because of these cuts. And earlier you had spoken about a delta of 6 to 8% between price and volume. How does that narrow in the coming quarters for you?
So I think the volume growths are going to be a lot more than what we've seen in the last, let's say, 3 or 4 months. So what usually happens is that if you take a price increase, that sort of delta becomes much larger in terms of volume. So now, if we are going to increase, let's say, a 10% volume, I would say that volume and revenue growths would be, sort of neck to neck in the coming months.
So does that mean we see higher single-digit volume growth in the coming months because of this, as against the low single digits that we've been seeing over the last 3 to 4 months?
Absolutely. Absolutely.
And do they touch double digits as well at some point?
Well, we always are hopeful that it should get to double digits, and I'm sure they will. It's a big initiative, Mangalam, and I do think that this should create the demand scenario that the Honorable Prime Minister has envisaged for the country.
Right, Mr. Very good afternoon. So obviously we're hoping for better volumes coming in for the company going forward. Let's just talk about any disruptions that we should be watching out for, maybe due to the stock that is there at the dealers, anything that we should watch out for in the near term?
Yeah, no, so we'll have to figure it out. See, this has come just a couple of days ago. We are in the process of planning how we take this forward. So if you were to think about it, you've got stocks in the factory, you've got stocks in the warehouses, you've got distributor stocks, then you've got laminates which are there, which are lying in every factory, which are packaging material, etc. So all those we've got to figure out. We usually keep a very tight leash on all our stocks. But we'll have to plan out all of these and figure out how we can get to market as quickly as possible with the increased grammages or with the decreased prices.
The increased grammages and the impact of that we're likely to see immediately, because the second quarter obviously is done with. These changes come into effect from September 22nd. So I suppose the second half of this year is where we should expect higher volume growth?
Yes, absolutely.
By how much?
It will take a little bit of time, Mangalam, to get these out in the market. And we will obviously make sure that we try to do it as quickly as possible. But, the grammage changes usually take a little bit more time than price decreases. So part of the portfolio will be done immediately, and a part of the portfolio might take a month and a half to get it to the consumers.
Right. Ex of GST, if you could give us a sense on the current consumption environment, what the general understanding is that the GST is boosting an already upward moving or improving consumer sentiment. Would you be able to, concur with that? And on the other side, we have these heavy rains, the kind of weather impact that has happened, that is actually putting a bit of a lid on what could have been better growth. How has sentiment been right now? And how much do you think will these cuts boost sentiment at large?
No, so that's a great question, because the sentiment for the year, for this financial year, started off really well. And then came this entire period of heavy rains, etc., which I think is temporary, because a good rainfall also impacts the economy. And I'm sure that as we go forward, it's only going to impact the economy positively. So leaving out the temporary stagnation in the last couple of months due to heavy rainfall, I do think that overall impact is going to be very, very positive from a consumption standpoint.
Okay, positive impact from the consumption standpoint. Mr. Berry, could you give us an indication just in terms of overall the commodity pricing? How has that been in Q2 as well? Any significant changes, or what are we watching out there?
It's within a band. It's not like what we've seen in the last 2 or 3 years, where there was significant inflation. We are now operating within a band, which is good. It's always good to operate, between 3 to 5% kind of a band, because that's manageable for most companies. And I do think that that's going to continue. I don't think I see any major inflation coming, in our way as we move forward.
Right, but you've taken some of the price hikes already. Now volume improvements will happen. The GST rate rationalization has happened. raw materials are in a bit of a band. First quarter, your gross margins were lower by 300 basis points. Have we seen the worst of them? Second quarter onwards, do we see improvement in gross margins and subsequently EBITDA margins?
Mangalam, it's very early to comment on that. I do think that it's only going to be positive, but I do think that, passing on everything that we have to the consumer and taking in mind the inverted, taxes that we have, plus some of the state benefits that, will become much lower in our factories, the state GST benefits that we have. So keeping all that in mind, we'll have to do our numbers and then give you what the overall impact is going to be. But yes, I think it's going to be a very positive impact on consumption and probably a positive impact on the trajectory of most FMCG companies.
Right, sir. Also, just in terms of, let's talk about dairy and cheese as well, right? Why leave them out? Because they have seen a reduction coming in. So overall, what are we expecting and what are you expecting in terms of synergies here because of this cut? Anything in terms of increase, and how will this price cut also be passed on? Will it be similar that grammage increase or price cuts?
Well, in dairy, it's mostly going to be price changes, straight price changes. And that can be done very, very quickly. And I do think that that's also going to have a very positive impact because, cheese is not such a well penetrated category. It's still less than 30% penetration. And the consumption is also not as often as other products are. And a price correction will certainly, give it a boost from a consumption standpoint, and that's what we are hoping for.
All right, so dairy does well, which was anyway doing well for you on a very small base. You have had the capex, etc., out there as well. In terms of the distribution, you had in the first quarter said that you are looking at internal restructuring of your distribution, and as a result of which there were some market share losses. Has that ironed out right now? How is the second quarter and the subsequent quarters looking when it comes to that?
No, we didn't see any market share losses, but yes, we are in the process of, getting to our route to market 2.0, which is, making sure that we create more bandwidth in our sales system to be able to handle more categories and more SKUs. And that's going really well. We are partnering with Bain on that, and we are about midway. And I think by the end of the year, we should have completed that entire restructuring on distribution.
Right. Market share losses, I meant in particular in the eastern region and not at the overall level because of this internal distribution. But, since we have you with us, you're a champion for the industry. You speak for the industry as well. The government has given an income tax rate cut in the budget. Thereafter, the RBI has followed it up with a lot of interest rate cuts as well that have come by. Now there is this GST rationalization. Despite that, even if you expect all the other FMCG companies' commentaries post this GST, they believe that the increase in volumes could not be more than, say, 3 to 5%, or in some cases, about 600 basis points. What else does the industry have to do, or what else do others have to do for the industry to get back to its glory days?
I think we are on our path to get back to the glory days. The government and the Honorable Prime Minister has done exactly what was necessary to give this industry the boost. And I'm 100% sure that in the next 6 months, we are going to see the fruit of all that's been done, in the last 6 to 8 months, and especially this GST change. I think it's a big initiative, and it's going to give us big results.
Mr. Berry, just a quick one in terms of, are there any challenges that you're facing, anything more that you require from the government? And does this, 5% GST and all those fillip that are given by the government right now give you a level playing field on the unorganized player competition side as well?
Well, I would say the only other thing that is required at this point in time, I think, is the entire inverted tax that we have, the input taxes. Obviously, some of the input taxes have been rationalized as well. We still haven't done our numbers. If there's a negative impact of that, if we can be, if that can be looked at, would be one. Second, we made big investments in our plants, right? We've been investing in a lot of states, and the states have been really kind to give us GST incentives. Now, with the GST rate going to 5% and the state GST now getting to 2.5%, we would request the state governments to give us a longer time to utilize the incentives that have been given to us, because we will not be able to consume them in the time that has been given at the higher 18% rate. So those are the things, those are the two things that we would request the government to look at. Otherwise, I think we are in a great place.
Got that. Wonderful. Varun, thank you so much for joining in and giving us your outlook on business, the impact that it would have on consumption because of the GST rate rationalization, and some of the queries that you had with regards to inverted duty structure as well. What I'll do is actually take the liberty to invite you once again at 4:30 today, if at all you have the time, because we are having a mega CNBC TV18 GST town hall where we are speaking with the GST officials, the CBIC chairperson, and all queries like, you've just put would be put forth to them as well. In case you can't join us, we'll obviously take this query for them as well. Take a short break. On the other side, we will get you more on the markets and stock-specific action. Stay with us.